We're live on our GoToWebinar platform, and we're also live on YouTube and Facebook platforms as well. So hopefully you can hear me and see me. Everybody on GoToWebinar, Yam Keller, Joseph, Kanginga, can you hear me loud and clear? I hope you can. Anthony, Christina, please let me know you can hear me. It's always reassuring that somebody's here. Those of you on the GoToWebinar platform, the PDF platform, PDF slides from today are attached. I'm obviously going to go through them. Hopefully you can see that screen as well. Those of you on YouTube and our other Facebook platform, our other social media platform, you should be able to see me as well. The camera is on. But let me just get rid of me, and I'll show you what we're going to talk about for the next few minutes as we start. Obviously, usual procedure. Stick your questions in the question box if you're on GoToWebinar. Stick it in the question box if you're on YouTube or Facebook. Big week ahead. It's the final 3 weeks of the year. It's central bank week, next couple of weeks. We've had a key day today. Mohammed saying gold is going to 1825. Well, let's see, Mohammed, my friend. Emma, about the Dow and the S&P. Well, they had a big down day again yesterday, Emma. Certainly in your 4-hour time frame, certainly in the daily time frame, went under some key levels as well. But we'll come to those in a minute. Let me just run through the charts for the guys in GoToWebinar, and hopefully you can you can see those slides. You can't actually see me in GoToWebinar, but hopefully you can see me on. No, that's not going to. There we are. You can see me on YouTube as well, if you want to do that, of course. Right, so let's get going. Obviously, trading is risky, ladies and gentlemen. I'm not going to read out the full risk disclaimer and risk warning, but basically, it's always about managing your risk. It's a mindset business trading. It's not about listening to people like me or YouTube videos or automatic indicators or any other guru or claims to be guru. It's about understanding yourself, your risk profile, and always managing your risk, understanding the basics of things like leverage and margin and lot size and the thing that you're actually trading, the product you're actually trading as well. My background, those of you who don't know me, I was in the City of London for many years. I worked for a retail bank and an investment bank. My investing plan has always been about probability, simplicity, and multiple timeframes. But principally, or more importantly, it's all about, as I said before, it's all about knowing yourself. Do what is probable and keep it simple. It's all in the numbers. If you don't appreciate or understand what leverage or margin or CFDs or what a gold option is or a gold futures is, don't risk any of your own money until you do know that, because markets can move very, very quickly and can very quickly take your money away from you. Somebody in the webinar, if somebody could say they could hear me, I'd appreciate that, because nobody said they can. So Joseph, Emmanuel, Anthony, anybody, just say you can hear me. I'd appreciate that, because I might be like talking to myself and you can't hear me, but obviously people out on YouTube can, because there's lots of questions coming in. And we'll crack on. Okay, let me just quickly run through the slides. We got as long as you guys want today. It's normally an hour, but let's see how long we take. So we're going to look at some of the key fundamental news this week and next week. Obviously, any assets you want to have a look at, there's already people listed those, so stick it in the question box. Malcolm saying he can hear me. That's great. Thank you, Malcolm, for that. So big week this week, even bigger week next week. This week we've had things that sort of spooked the market. The dollar was on the back foot the beginning of the week. The services ISM number, remember services, the PMI number here that came out on Monday. Services accounts for nearly 88% of the developed market economy. So the big industrialized companies, services, the service sector, people that produce, not people that make stuff like manufacturing sector, but the services sector. So people like bankers, accountants, estate agents, everybody that creates a service that gets paid for what they do without actually producing anything, a bit like brokers, they're part of the service sector as well. That's the most significant part of the economy, and it grew better than expected quite significantly on Monday. The PMI, remember, that's the Purchasing Managers Index. It's it's what the people in this business, in the services business, expect, or what they're purchasing to get their business going. Ottawa, thank you for that. I'll put on all your questions as we move forward. So that was positive on Monday. Tuesday morning, we had the RBA, the Reserve Bank of Australia, increasing interest rates, as you can see there, from 2.85% to 3.1%, so 25 basis points, or a quarter of 1%. As expected, that was it. The consensus was 3.2, so no surprises there. However, the statement from the chair, the governor of the RBA, was much more hawkish than many had expected. They're still talking that inflation is too high. It's going to top at 8%, they think, in December in Australia. So they're still pushing interest rates up in Australia, as all the developing market central banks are, save really the Bank of Japan, but more on that as that rolls out next year, no doubt. GDP today from the Eurozone, again, was a bit better than expected, so it's surviving better. The stories of a very hard and difficult winter for Europe still because of the energy crisis and obviously the war in Ukraine. It's still going to be a very difficult few months for Europe. We have had this price cap. The EU and the G7 have agreed this week of Russian seaborne oil at a ridiculous $60 a barrel. And yet on Monday, when it came into force, the Russians were selling it at $78 a barrel. So they're Urals oil. So the impact is very questionable, but it's a symbolic thing more than anything. Bank of Canada tonight, probably following the RBA with an increase in interest rates again. But as you can see there, they're expected to increase by 50 basis points, so a whole 0.5% tonight. So watch that, 5 o'clock server time, so in just a couple of hours. GDP from Japan overnight. Miss Lagarde, another speech that she's had a few speeches this week. There's no speeches from the Fed this week because they're in a lockdown ahead of their meeting next week, and that really is next week is when it all starts to kick off big time. And don't underestimate this late piece of data here on Friday. The Michigan, that's the University of Chicago Consumer Sentiment Index. That's quite a significant potential market moving piece of data as well. Remember, we had the very strong non-farm payrolls on Friday, so that's added to the bounce back in the dollar. And we'll come on and look at that in a minute. But I'll say next week is when it all starts to kick off. We've got top of the shop is obviously the FOMC with their 2-day meeting concluding on Wednesday the 14th, next Wednesday evening, 9 o'clock server time. What's that? That's 1700. What am I talking about? It's 1900 hours GMT. So see what they've got to say about that. They're the ones that drive everybody else, aren't they? 50 basis points is expected from the Fed. Is it going to be another hawkish overtones? The likelihood of a 75 basis points come back a little bit. It was down to about a 20% chance of that happening, but certainly it's come back a little bit after the strong payrolls number last week. The weekly claims also not going up as much as expected, and the private payrolls, the ADP, was better as well. So key event next week is the Fed. We've also got the key inflation data before that on the Tuesday as they start their meeting, interestingly. GDP from New Zealand. And now on Thursday, the 15th, we've got the Bank of England and the ECB, all with their rate announcements as well. Both expected to move rates again, and the Swiss National Bank as well. So a huge week next week. Top of the shop is Wednesday, the 14th for the Fed. Then it markets may calm down somewhat as we run into the end of the year with 10 days to the Christmas from the 15th and 15 days to the end of the year. So that's less than 10 trading days to the end of the year. So things will calm down after the 15th, but certainly lots of potential volatility. Some of the strongest trading days of the entire year occur in this last 2 weeks of December, certainly in the stock markets. So retail sales, and we finished the week with more PMIs out of Europe, US, and Europe and Germany as well on the 16th. So still lots to get through. So let's have a look at what we want to have a look for charts. So who's up for their first request? The first request I can't see. Let me just get rid of. Let me bring in my my chart. That's the euro. This is the euro on the 1 hour. Sorry, it's gold on the 1 hour time frame. Can you see all that? Okay, I know it's a black background. If you'd prefer a white background, let me know. I've got some white background charts. But the first request came from. Let's have a look. Who was this? This was Mohammed was asking about. Now then, why can't you see that on my? Can you see that on my screen? No. Right, so let me just get this right. So everybody can see my screen, and you on users on YouTube and our social media platform can see Mohammed's question, I guess. So Mohammed's asking, is gold going to 1825? Well, 1825 is way up here, isn't it, on this 1 hour chart? If we go to the daily time frame, zoom this up. This is the 1 hour chart, so it looks a bit. There's obviously lots of lines on there. So the daily time frame is relatively well bid. This is the pink line here. The magenta line here is the 21 exponential moving average. So gold remains in an up channel. It rallied through 1800 last week, didn't it? We had a big up day on Friday, on Thursday ahead of non-farm payroll. Then we've rolled over, but it's still holding up. So we're still holding the key 1770 level. So next leg, it could take us to 1825, Mohammed, but at the moment, we need to break, obviously, back over the psychological 1800, and the big support is 1770, and the 21 EMA sits at 1750. So two big round numbers, 1770 and 1750 are the two big supports for gold on the higher 1 day time frame. 1825 is certainly not out of the question, but obviously we'd need to break and breach the 1800 level, which you can see we didn't do on this big up day here on the 1st of December. Big strong candle, very short wicks to the top and to the bottom. So big positive candle on the day, but it just about breached a few dollars over 1800. Zoom that up. Sorry, zoom that up. I can't zoom that in anymore, can I? No. Just over 1800. So we've come back down there into this support here at 1700, which is previous resistance in the rally up in the middle of November. So a break of 1800 will take then 1850 and then 1825. So there's some big resistance levels to get through, Mohammed, if that's going to go up to the upside. Okay. Intraday, the 4 hour has come off. There's that 1800 level. It's come off down quite significantly, but again, supported by this blue line here, which is the 50 period moving average. So the 4 hours been supported by this blue line here, which sits at that key, as we just said, 1700 level. And you see that also in the 1 hour time frame. We go down to the 1 hour time frame. We zoom in a bit for the 1 hour. You see we've over 1800 a couple of times. Then we came down quite aggressively earlier in the week on Monday under the key 1700 level. But at the moment, you can see that the brown line here, the gold line, is the 200-hour moving average, which has really provided our pivot and our support yesterday and again today. And here at intraday, it's ticked up in the last couple of hours, so it's sort of breaking out. And intraday, on a 1 hour time frame, you'd want gold to break 1780, that high from yesterday, to take it higher. We're over the 50-hour at the moment, but it's really sort of going sideways. So break of 1780 could take us to 1788 today, but we had a big shakeout here on Monday. So there's the resistance areas as we go. So 1788, 1795, and then the big round 1800 is gold. Rowan, good afternoon to you. Emma is asking about the US 30 and the 500. Well, nothing's really changed ever since we last spoke about this. It's been in a big downtrend. Take your 4 hour trend, your 4 hour time frame. You see, we topped out here 34,400 this week. Had that big up candle. I'm sure you're more than well aware of it. It's a huge up candle here we had on the last day of November, and we've just been down ever since, haven't we? So we're into a key level now. You see this floor, which is, when I say it's a key level, it's because it's the floor of this big candle here, the big up candle. and we've breached below it yesterday. Here, see the floor there. So this 33,585 level has also been breached today. And here, using this particular chart setup, the crossing moving average, so we were long, didn't play out, did it? We went short, and that would have still been short if you hadn't pulled your, might have been stopped out, but certainly that went short again here at the 12 o'clock candle on the 5th of December. When was that? It was on Monday, and it's been short ever since, and it's moving down. And you see the wicks trying to spike lower, although the candle bodies, as you can see from that, Emma, is slowing down. So that's to the downside. MACD's negative. The signal line's under the zero line again and moving down. RSI is moving into the testing the oversold area. So next support I've got on my chart here sits at 33,278 on the 4-hour, but that's certainly in a downtrend, and that'll still be the same for the S&P. If we look at the S&P futures, that's the USA 30. That's the spot market. This one is the USA futures. There's the big up day on the 30th, and then we've shaken out much more of a demonstration there, much more negative. We're comparing the industrial USA 30 to the wider USA 500, Emma, and you can see that that's much weaker. You can see this is the daily candle, so we're into our 5th consecutive day lower here for the S&P 500, having spiked and not been able to hold 4,100. We've been down for 1, 2, 3, 4, 2 big down days, Monday, Tuesday. 1.79% fall yesterday, a 1.44%. Sorry, on Monday, 1.44% fall yesterday, and those two. That's the 59th day where the S&P 500 has fallen more than 1%. During the year. That's quite a significant number. 59 days, the S&P has fallen over 1%, and we've had 2 consecutive days of that on Monday and Tuesday. The last time that happened was 1974. I might want to write all this down, guys. 2002, the fallout from the tech bubble, and 2008, the financial crisis. So it's a significant decline, or declining days percentage-wise. So December, which is normally quite positive and strong for stocks, has got off to a really bad start. As I say, we're into our 5th consecutive day lower. We're under 3,950. 3,900 is the next big support level. But you, on your 4-hour time frames, Emma, remain short. Clearly, just like the S&P, the Dow. But certainly the big down candle was here. It's retraced a bit, and then the last big down was here later on Monday on the 5th, but certainly it's broken that. It's broken the 4,000 level. It's pitched through the 3,900 level yesterday, and then it went sideways over the Asian session, and it's down. What's happening now with the 4-hour candle is the 4-hour candle is now testing the 200 period at 39115. So there'll be some target set there, but then 39 to the downside, 3880. And then 3850. So rolling over, and you see what a key level that was yesterday, this 3950 level. And if you look at, just go back to the daily time frame, you can see, it hasn't been able to hold over the 200-day moving average. It couldn't break it here when it ran to it in the summer, having had that big summer run up. It was over it here, but this takes us all the way back to the end of March. And it was only a few. It was longer. It was nearly the best part of 2 weeks. It was over its 200-day moving average. But since then, it's been down, retrace. Nice big run here. It's 15% from this floor in October to the top here. You can see that we're up about about 15-17% from that floor. But we've come down and given up that break of the 200-day. So 5th consecutive day down. 4-hour remains to the short side. Annette, good afternoon. Nobody on webinar on GoToWebinar wants to add a asset they want to let me have a look at. Everybody's over on YouTube. So Antoinette says hi. Chiddies, what's your expectation on gold? Well, I just said gold remains relatively well, on the daily time frame, relatively bullish, given that we're over the 20-day moving average and the 200-day moving average here. That's 1760 is the big support there on the daily time frame for gold, but it looks like it's run out of steam as it's spiked up this 3-day strong rally to 1800. It's given up most of that last leg up, but it's got big support at 1770. The 200-day sits at 1758. This is the daily time frame, and the 21 sits at 1754. So they're the key supports daily on the gold. Nicholas, good afternoon. Emma, Ergon Junior, gold. Anybody other than gold? Let's have a look. You're all gold traders. Nothing wrong with that. Zibuzi's asking about dollar yen. Let's have a look. Dollar yen. Again, time frame. This is the 1 hour. I should start with the daily and zoom out a bit. So we had a big rally here, obviously in October. We've been down from these highs as we went over 150, and it's as the Bank of Japan have intervened, and the trend remains to the downside. So what's happened recently? Let's zoom up, and we run down. We went down to 130 to test 134 last week, and we bounced this week back up. So if we come down, I zoom in a bit and move out. So so far this week we've gone. I say we went to test 134 and we've recovered there. The 4 hour candle remains above its 21 EMA, although it's come back down in the last in this current candle, which is still yet to complete. So I'll zoom it up. So 4 hour ran to 137.70, couldn't get to 138. 130.70 is the resistance. Big down candle at the moment, but it's still over its 20 EMA at 136.50. So 136.50 is your 4 hour support, Zabuzi, and we're currently trading just on that at the moment. As far as 1 hour traders are concerned, there's that 137.70, we just couldn't break for 1, 2, 3, 4, 5, 6, 7 hours. Big key resistance, and that broke right into its 20 hour, and that's looking like we've still got 5 minutes of this candle, but that's going to trigger a short trade, though anybody that's trading this crossing EMA strategy. From the rally we've had Monday, Tuesday, that's triggering a short trade that didn't play out yesterday. We went then long quite nicely. That's just closed out that long in the last hour, and now that's looking to go short again under 137 at 136.70 at the moment. Next support is the big round number at 136, then 135.80, 135.50. It's down. I remember last week's lows, we got to as low as 134. So lots of action on the dollar yen. That's a yen gaining against the dollar. Worries we're still where are we? It's 5 to 4. So we're 35 minutes away from the cash open on Wednesday. Big news this week is obviously all about the dollar coming back a wee bit, but also the yield, the inverted yield curve. I was reading this morning the German yield curve, the 2 to 10 year, that's over 100 basis points inverted. That's screaming recession. And if this cold snap that's hitting the Northern European countries, including the UK, that's going to really test these energy supplies and the storage they have built up over the summer. Malcolm's asking about the Aussie dollar on over on the webinar. So let's have a look at Aussie dollar for Malcolm. I don't know what time frames you're trading at. And Galvin is asking about the Swiss against the yen as well, two safe haven currencies. So Malcolm asking about the Aussie. So Aussie is typically a sensitive currency, risk-sensitive currency. It's bounced, interestingly, from this big downtrend we'd had from Monday. So Monday we spiked to 6.6850. It's been trending lower. Big sell-off on Monday. Tried to retrace yesterday. Couldn't really break that 20-hour. Did for one candle and came back down. Went short again then. A similar sort of move here. So we're looping lower, up, down, and now we've bounced and broken here. So again, another one that's looking like it's moving higher. The MACD is starting to rise from this floor. So 66.50 was broken. We did put in a new floor today. So we went lower than we had done. So we put in a new floor for the week at 66.70, which corresponds all the way back here to last week. Last week's low, intraday low, actually was all the way down there at 66.40. This was, when's this from? That was from the 29th, so called the big up day. So we rallied up into 68.50 and it's been down. So it's moving quite aggressively now. So the dollar's coming under a bit of cosh. We saw the dollar yen up 2 big hours for the Aussie. So it's broken up. That will trigger long in a minute when this 3 minutes are up. But see if we can hold this break which we couldn't before. But see, at the moment, obviously we can't decide on this, but it's a significant break. See how much higher it is over the 20 hour moving average. So we found the floor at 66.40. We're over 66.80, which is Tuesday's floor, and that's looking to go long at the moment. Aussie on the 1 hour. 4 hour time frame will still be short, although it's a big. There's those two levels. 67 is the big up candle here. This is this one? I can't remember. Is this a 12 or a 1 o'clock? I can't remember. Yeah, it's a 12 o'clock. So this one's about to complete as well. So it's a positive engulfing 4 hour candle there, taking out the 1, 2, 3, 4 previous hours. So that's a positive candle. It hasn't actually crossed its moving average yet, but that's looking some positivity on the 4 hour. The daily, on the other hand, is still in a rollover downtrend from this high, this break to 68.50, and we were down Friday, Monday, Tuesday, and we found support. So the daily support sits at 66.70. There's that 21 moving average EMA, which we've bounced off, which you saw in the 1 hour time frame. There we go. We've bounced off this 66.70, and we're looking to move up in this current time frame. Malcolm. So that was all right. You were asking about the multiple time frame. So that's the 1 hour. The 4 hour, I say, is looking to trigger long, but using this particular, I'm saying trigger long. Using this particular strategy, you need to wait for this blue to cross the yellow and then across the pink. So it's waiting at the moment. But from a candle perspective, if this closes in the next minute or two, sort of just about where it is, or a little bit higher, above 67. Can you see that? I can't make that any bigger. But 67.11 is where it's trading. Well, anything above here, that's going to be relatively positive because it's engulfing all of these previous 5 candles here. That's a positive up candle, but the moving averages haven't yet crossed on the 4 hour. And as I say, the daily, there's your key support, which we pointed out in the 1 hour at 66. Really, I call it 66.70. It's only a few pips. Okay. Hope you can see that, Malcolm. Hope that makes sense to you, my friend. Okay. Sadiq says hello. Tazan says hello. He says he can hear me. Can hear me. That's very good. Voice. All right, because I asked that many times now. Sorry. Good afternoon, everybody. God's power. Hello. Oh, from over on. I don't see many people coming in from there, Jeremiah and Mohammed as well. Nice to see you. Mostly it's YouTube, but welcome. Hope you're well. Hope you're staying safe. Let's have a look. Next request was the Swissy yen, and that comes from Galvin over in our webinar. So Galvin is asking about the. Swiss yen. I said, didn't I? It was a Swiss one. I've got Swiss yen here actually. Let's have a look quick. I should have Swiss yen. There we are. So very much sideways actions as you quite often is. This is the daily for Swiss yen, Galvin. And some big lines on there. 150 was that high we found in October. Our November high was 148.66, and so far we've been down from there, haven't we? So if we zoom, I don't know, zoom there, but there you see on the daily time frame, that's been short here from the 24th of November. Big move down into 143. earlier this week, and then it's another one that's bounced. So on a daily time frame, it's back over 145.50. This line here, this the big blue line here, but again, it hasn't crossed. We go down the time frames. The 4 hour triggered long here on yesterday. No, not yesterday. On the 5th here, having been short, it's triggered long with this trend following setup we've got on the charts here. What's the line? There it is. I want it. There it is. So that's gone long there on the 4 hour Galvin. It's ran through 145.42, which was 50. Next resistance 146.36, and it's rolled over from that 4 hour. The 1 hour has been short, went long, and it's last long was again yesterday on the 1 hour time frame. Really. Would not work. So it looked like it was going to go short, stopped out. You could have taken it long yesterday then as well at 3 o'clock, but it's because it's following the rules. It's above the candle closes above the outer weighted because it retraced out. That would have been more comfortable. I even waited for that and waited till this morning. So I might have come back in this morning. Certainly taking that long at 2 o'clock in the Asian stage. It's rallied. And now it looks like it's closing out, and that would have closed out actually in the last hour. So it's ran out of steam today. We got as high as 146.25, but the hourly candles couldn't close above 146.21. So 146, the next big round number for Swissy yen, sits around about, sound about right on there, doesn't it? Let me put that in. Object indicator. Let's make that a yellow line, and that's the 146 level. Is where we've run out of steam today so far. Close. It didn't. It was playing with it, didn't it? It didn't want to go high. Now it's come back down. It may be just trying to shake out. And the intraday, it's not high, as I say. The end of hours a bit higher than that 146.12. Let's call it 146.15. I like to use fives. Just make that's the sort of intraday hourly high. But so there's the two levels. If we're going to go back up, we need to get back up there. These need to cross before we go short, but the 20 hour is still supporting. See how it went under it yesterday. So it's still biased to the upside intraday. Galvin, I don't know what time frame you're looking at there. What are the values of your moving average and how do you enter a trade and exit? Galvin, if you're obviously new, this is a crossing EMA strategy. Look on our website for our crossing EMA strategies. Let me just show you where that is. So on our website, this is our education page. All our webinars are recorded. All our strategies are down here. So obviously have a look at all of this. So the webinars are all here. Have a look on our YouTube page as well. So this is what's coming up. You don't have to just listen to me in English as well. If English isn't your first language, you've got multiple presenters in multiple languages everywhere from the Philippines. These are all obviously Asian countries. We've got Spanish webinars as well. But yes, I say if English isn't your first language, please have a look at that. If you click on this one, past webinars, all the different strategies and the approaches and recordings are here. Some of them are audio recordings as well as video recordings. Yesterday, we did a swings trading strategy. The one we're talking about is a crossing EMA strategy. Let me see where that is. I'll explain it to you now, but if you want to watch a more in-depth explanation, have a look down here. And trending strategies, it's in there as well. But the actual crossing, where's the crossing EMA strategy? It's definitely here somewhere. Anyway, scalping strategies, crossing EMA strategies is the one you're looking for. But let me just explain to you, Galvin, what it is. The one you can see. This is the 21 exponential moving average, the magenta line. The yellow line, I don't know why it doesn't show it up. The yellow line here is the 9 period, there we are, 9 period EMA, the exponential moving average. And the blue line is the 5 period EMA. The 5, the 9, and the 21. Some people use 5 and 8 and 13. I mean, there's lots of variants. The point is, with moving averages, that they want to be aligned and they want to be in order. So they need to cross before they trigger any particular trade. So what am I saying here? So here it was going down, weren't we? The 21, 9, and 5 were all moving down, and we're aligned down. We had a bit of a cross there, but we didn't break over the 21. We had started to cross here, didn't we? Zoom this up, and I go back. We started to cross. Oops, switch that off. We started to. Where am I? The bottom of the. Oh dear me. So we were starting to move up. So we'd been moving down. There we are. We can see it better now, can't we? And we crossed here, didn't we? The blue line went over the yellow line here back on Monday, and then we broke over. We finally broke. Well, in fact, we broke the first trade. The first trigger would have been there, 5 o'clock in the morning on the 5th of December, because it's broken over and it's often it's rallied and it stayed over the moving averages have been aligned in it all the way up here. They got close here, the blue, but it didn't cross, did it? It didn't cross so it's still long. It wasn't only in here until it broke under that, but then it broke down quite significantly, didn't it? Here on this here at 10 o'clock on the 6th. So we had a nice run there. Then it went long again. So it looked like it was going to go short, and that's what I was saying in the intro, wasn't I? Then it went long here, and it's continued to go long, and now it's just closed out again under the 9 period. But there's lots of different ways of trading this, where to put the stop loss, how to trade it. Watch the full webinar on explaining how to put your stop loss, how to trail your stop loss up, how to have a fixed stop loss, how to have a fixed target using the ATR. I explain how to use the ATR, really like this indicator down here, the average true range. That's the average fine distance it travels. So have a look at that, and it's a trend following strategy. It's great when it's moving up. When it's going sideways, it's no good. So I can't give you it's actually quite trending quite well, isn't it? This one, it's not doing, but where it's sideways here, it's not. But it's still, just got to stay in the trade, stay patient. Okay. Any more from anybody from the webinar? That's the only two, wasn't it? Swiss yen and Aussie dollar. Next up was Michael back to gold. Everybody's obsessed with gold, aren't they? Let's just go back to gold. It won't have changed much since we were last there, will it? I don't know what time frame you're trading on there, Michael. But gold, as I said earlier, I don't know if you were in earlier, I assume you may be. We got a resistance at the big round 1800. We broke it last week. We couldn't hold it. It was just a minor break over. I think it was 1804 we broke over. Then it's come down. We had a big shakeout on Monday into the key support area, which is in place now, which is 1770, Michael. We were up yesterday and we're currently up today. So if we go down the time frames, on the 4 hour, the down move into the 1770 level has been supported by the 50-hour moving average. So we're under the 220 hour, but we're supported by the big round number that is 1770, and the 50-hour moving average is starting to move up. So these two are squeezing in. You can see the 20-hour moving average moving down, the 50-hour moving up. So we're getting a squeeze. And they're unaligned as well. That's the other thing. So it's a bit of a mess. But on the 4 hour trades, which has just closed a big up candle, actually closing across. So that's we need to break 1780, then 1788, 1795, and then 1800 is the upside targets. The support is 1770, and then 1762 and 1758. Really, that zone. I don't want to put those two on there, but that's a 4 hour trade. And 1 hour, as I say, that triggered long an hour or two ago. There, in fact, it triggered long at what's that? Can't be right. At 2 o'clock. No, 3 o'clock, 4 o'clock. Yeah, at 3 o'clock, that's just triggered long. Although it's still really a bit channel bound, but it's looking to go up. Maybe trying to, but 1780 needs to break to take that higher. So it's gold on the 1 hour time frame. Dave says, I'm a new trader. I would love to know how to read the news. If the interest rate goes up, does that mean that the currency will gain and go up? Tends to be correlated that way, Dave, but don't get too hung up on each and every news announcement. Okay, this week, the coming week is going to be absolutely critical because we've got the most important people releasing news. Economic news happens all the time. That's what our economic calendar is all about. Okay, that's what I showed you on the slides. It hasn't it hasn't saved my. So here on our tools base, you go to our economic calendar, you can see, and this is the default. It's not held my filters that I got in. So these are all different countries, So you could you need to set your calendar up for the news that matters. And the most important news that matters are red announcements because they're for the big economy. So the big news today, there's two big events today. One was the GDP, the gross domestic product, final reading. So it's not as important as the initial reading, but it was better than expected. That was good for the euro, or it should have been good for the euro this morning. Euro, big economy, third biggest economy in the world. Clump them together after US and China. And then the other big news today, but there's obviously other news coming out. So this is the Philippines, Polish news, American news, Turkish news, the cash rate, cash balance, is the Bank of Canada's decision at 5 o'clock in only 45 minutes time now. So you need to set up the way I set it up. I'll show you. So that's how it defaults for everything. You can add all the news. And then there's the degrees of importance of the news. So red is the most important. It's going to have the biggest impact. And grey is having the least of impact. So what I tend to do, I tend to have the very high and high news. But I'm not really interested in all these other countries. So the countries I'm interested in is the United States, the big economy. So the Swiss economy. I'll add Japan because it's a major currency. Japan is obviously a major currency. I have Australia on. I'll have Chinese news on. Just because it's not a major currency, but it's a major economy. Potential market movement in the UK, similarly, Germany and EU, Canada. They're really what I want to look at. So I'll filter my results. I'll tick this box here, save for later, filter my results, and I'll just see the news I want to see. So today, there's the two big, huge impact events. The Aussie GDP this morning as well. And the Bank of Canada to come. So that's how to use the calendar and have it. And certainly if you're an intraday trader, certainly have that on all the time. So yes, Dave, to answer your question simply, if interest rates go up, it tends to be hawkish or positive for a currency, so it should go up. However, as the calendar showed, markets don't just wait for the news. They react to the news, certainly, but they have an opinion about what's going to happen. So, for instance, today, they're expecting the Bank of Canada here in 45 minutes to increase its base rate, its main interest rate, by 50 basis points, 0.5%, to 4.25. If they don't do that, that'll have a big push down on the Canadian dollar. If they do that, which they're likely to, and the statement that here has got some what we call hawkish statements, i.e. they think that inflation is still quite strong. We're going to have to keep their inferences. They're going to have to keep putting interest rates up for perhaps longer than the market is anticipating. That will also add to the benefit or the upside to the Canadian dollar. The other key thing about the Canadian dollar is, of course, it's very correlated to the oil price, and as we've seen today, the oil price has hit a 2022 year low. It went to 73 or 72, the US oil price at WTI, all related to obviously the politics around the Russian cap that the G7 and the EU have put on Russian oil. Malcolm, yeah, I'll get to the pound yen, certainly, and the euro as well, of course. No problem, my friend. Just keep sticking in the box. We'll keep looking at it until people stop coming. So that's how to play with the calendar. But yes, to answer your question, Dave, yes, that is correct what you just said. Okay, Adji says hello. Edwin, I'll do you before Malcolm's question about the pound yen. We have CAD news at 6. What do you? Well, oh, there we go. I was just talking about that. Well, as Edwin, I hope you understand. We're listening to what I've just said. Yes, it's expected that they'll move interest rates. So that's a non-news event, if you like. Hang on, let me just put it back. It's not a non-news event, but it's obviously a major news event. That's why it's red. But the market is expecting the chair and the statement to read that inflation's ticked up, always ticking up. It's still moving up in Australia, in Canada, like the Australians said, might not have rolled over like it may have done in the US, but again, we'll see. And as far as the dollar CAD is concerned, which is obviously the biggest impact, the biggest currency that has the impact, you can see that dollar CAD has been going in the opposite direction. Now it's been going up. So the Canadian dollar has been weakening against the US dollar. So this is the 1 hour time frame for dollar CAD. And we've been rallying all week. So on Monday we went down under 134. Let me zoom that up. We went down to under 134. This is 134.300. Big leg up on Monday through 135 into 136. Couldn't break it. Broke 136 yesterday. And then we've rallied as high as, couldn't get to 137, but we were just shy of it earlier today. So the Canadian dollar has come down, but that's really in corresponding with the oil prices been going down as well. So dollar CAD has moved up. Obviously, the dollar itself is vulnerable to oil price movements, and the US is a big oil producer. But the impact on the Canadian dollar is much more significant is on the US dollar. So here, dollar CAD has rallied this week from this low under 134 to a high just shy earlier today of 137. What was within a smidge of 130. If I put a big thick 137 line on there, it'll look like it's hit it, won't it? So let me just put that on for the sake of completeness for next time I come back to this chart. So just bear with me a second. I put that on as 137. Okay. I'll get rid of, delete that one. 137. There we are. So we were within a pip or two of 137 today. So a huge rally this week for dollar CAD. We can see it can do that. So coming down at the moment, but we'll see how hawkish the Bank of Canada are. Okay. I hope that's answered your question, Edwin. And Gozi, I'll come to the Aussie in a minute, but Malcolm's asked about the pound yen. So pound yen is here. So again, another one that's rallied this week from 165 as high as 167.40 this morning. Interesting on that this morning. Yeah, probably was this morning. 167.40, which was yesterday's high as well. So it's bounced off that and come down quite aggressively in the last couple of hours. Still way short of 168. So that's triggering short in this hour. It hasn't actually. That obviously that on the hourly time frame, that candle has still got a way to run. In fact, it's got 40 minutes to run, hasn't it? So it's had a nice rally today, and now it's closed out at the moment. So 167.40 was its high today. Looking down, higher time frames, really bit channel bound on the 4 hour. 168 is our high from last week, and 165. So there's a 300 pip. Zoom that up a bit. There's a 300 pip channel there. 165 is the floor. 168 is the top. It needs to break out with that. It's sort of channel bound for the last few days. That is daily. Sorry, I thought it was 4 hours. Sorry, excuse me. So 4 hour. There's that 165 floor. It's been up this week, but again, 167.41 has been a bit of a stretch. It's still positive. It's above its 21 moving average at 166.36, but it's struggling to get to close its 4 hour candles above the 167 level. 167 the round number 167 is right there. See whether my cursor is there. To the upside. So there we go. The support 66.35. What was that? That was pound yen on one. Yes, I don't know if is that your time frame, Malcolm. You said 1 hour, 4 hour, and daily. So that's let me just go back again. So the 1 hour for pound yen has found a top at 67.40 and looks like that's triggering short in this current hour. The 4 hour still remains long, but again, 167 is the resistance. Then 167.40, and the support sits at 166.35. And on a daily basis, it's really channel bound, big wide channel, 300 pips. 165 is the floor, and 168 is the roof of the top of the channel for pound yen on that higher time frames. My friend. Next up was Ngozi asking about the Aussie. I think we did the Aussie earlier, didn't we? But I don't know if you were here or not, my friend. Where's it gone? Where's my Aussie chart gone? Here it is. Australian dollar. It's had a rally into the end of November. We peaked over 0.68 and we've been down since then. So we closed over 0.68 just for one day. Intraday, we went as high as 0.6850, but we've been down ever since for the Aussie on the daily basis. So still supported. We're right at the support now. 66.70 is the big support. On an end of day basis, Ngozi, and you see that on these other time frames as well. So we've gone down to the 4 hour. There's our 66.70 support, which we ran down into. So it went short here on this big down candle on yesterday, and it's moved down into 66.70, and it's bounced off it. It still hasn't gone long the 4 hour because these moving averages haven't crossed. They could still turn back down, but we got resistance. At 67.30 is where that 21-hour EMA is there. And the 1 hour may have triggered, yes, 1 hour there did trigger long in the last hour when it broke over 6.67. It's moving higher still, but first resistance sits there from yesterday's hourly close, 160.67.40. And then the all-time high yesterday was at 67.44. 67.44 to the upside intraday is your next target for the Aussie Ngozi. If you're trading that on the 1 hour time frame, I don't know what you are. George says, I'm a beginner. What is the best strategy to go with, please? George, everybody's asking that all the time. You need to find a strategy. You're saying, what's the best strategy to go with? You need to find a strategy that fits your personality. This business is it's a psychological business, a mindset, it's a mind game sort of business. You need to understand yourself first. Understand that you can lose a lot when you're trading. You do lose a lot of trades, and you've got to be able to manage that risk quite well or very well, because it's a very much a mind game. I don't know if I can I put that on there? I can put that on now. Can you see that now? I can't see if you can. No, I'm not sure you can see that now. I'll leave it on there. No, you can't see. I don't know who can see me. Oh, I can't remember now. It's this chart, isn't it? Yeah. So there's no point in me doing that. Let's go back down there and leave that on. I'm getting confused what you can see, can and can't see. Anyway, I'll stay down there. And when the other key thing is, when you do lose trades, you've got to make the actual loss very, very small, and make sure your winners, are bigger than your losers. So this strategy you can see on the screen here is a moving average crossing strategy. Very, very simple. Really, but it's nothing. It works, and it works effectively. So it's how you deal with it. Okay, lots of false signals can be triggered with moving averages, and moving averages can be very slow to react. That's one of their big problems. However, if you're on the right side of them, they can run and run and run and run and run, like we've seen here from Monday. It went under its 20-hour moving average there, didn't it? It sort of went into it here, and it hasn't really been back over it briefly for 1 hour, and then it was under it and under it there briefly, and now it's started to move up. So it looks like, that move down has finished at 66.70 was the absolute floor, 66.80 from yesterday. So it went lower, but now it's looking to try and move up. And so, as we just said, the move up is the move up. So it's really, a strategy that works for you. Can you look at your charts every hour? Can you look at your charts, only once a day? So therefore, you'd want to look at the daily time frame. So this chart looks very different on the daily time frame than it does on the hourly time frame, doesn't it? It's still okay. It's still supported by its 20 period moving average. So if you were long from this cross up here, you've probably been out, got back in. You'd have been out now. There's nothing happening here on an end of day basis until these moving averages cross. So it's all about the time frames that you're trading. If you're trading, short term, there's lots of action and it moves around a lot, but the gains are much smaller because you're only trading shorter time frames. So this looks like a nice strong trend, but it's gone from 66.80 when it's crossed long, hasn't it? And it's still, so here for 5-minute traders here on the Aussie, you're still long all the way up there. So it's time frames that work for you, okay? So that's the most important thing. And on that, George, watch our risk management webinar and finding something that works for you, because it's not the strategy. There's lots and lots of, it's hundreds, if not thousands of strategies. Most of them work, and they work well enough. I either get a good hit rate of, say, 60% win rate, and that's good enough. But again, it's a mindset thing about, can you cope with the ones that lose, the 40% that lose rather than 60% that win. So yeah, have a look. And George, let's say, come to our education page. I don't know where you are in the world, but we've got lots and lots of helpful education centres around the world. There's 3 in Nigeria. We've got a big one in South Africa. We've got a new one in Nairobi in Kenya. Hopefully, we're opening one in Cairo in Egypt as well. So. And lots of the stuff's online. So come on to our website and have a look at the stuff there as well. Where's my website gone? Where's my webinars? There we go. So this is our old webinars, George. There's lots on here. These are the past webinars. But go to the education page, and there's our videos, our e-course to get yourself started. That's all the stuff we write. Our analysis page there. That's what we write. So. We're here to help, my friend, and the very best of luck. Who's next? Nicholas is asking about dollar CAD, your thoughts, and Edwin was also asking about dollar CAD, and Bosie was asking about CAD yen, all to do with the imminent announcement from the Bank of Canada. So Canadian dollar intraday has had a strong run, but it's triggered short here. If you're going to trade this, before one of the most major, I personally, it's a major announcement. The most significant thing that can happen to the Canadian dollar, or any currency for that matter, is an announcement from its central bank, and that's imminent in the last half an hour. So whether the market makers, the players in the market, have pushed this up deliberately, they might, expecting on what the announcement might be. Don't be caught out by it. But technically, this has been long Monday, Tuesday, and today. Ran to 137 and then is now triggered short. Whether you take that trade up to go short half an hour before the biggest, most significant announcement, that's your call, my friend. But taking a step back on the daily time frame, the dollar CAD remains sort of big, doesn't it? We went all the way down here to test 132 in the middle of November, dollar CAD. And then since that, the dollar has come back, the US dollar has come back against the Canadian dollar as the oil market has weakened, and we've gone back over 136. So that, on an end of day basis, remains strong to the upside. We have resistance at 137, 137.50, and 138. 3 big fat round numbers for dollar CAD to break to the upside. It couldn't break much above 138 here in October, and it came down quite significantly. So that's the resistance to the upside on the higher time frame. The 4-hour trader is still long, but we've had a tweezer top there at 137. Last two candles. There we go. See, that's a little tweezer. Nice size bodied candles. One a wee bit bigger, but that's looking shortish. See what they having topped at 137, but 137 is a big resistance to the upside on the 4-hour, and the 1-hour trader, as I said, triggered short here in the last hour, but I say we're only 45 minutes away. So that's my take on CAD. Sabusi was asking about CAD Yen. I've got CAD Yen here. I think I might have. Because CAD's got a bit. CAD Yen. Have I got CAD Yen? I haven't got CAD Yen. I don't know if I can find it immediately either. File. Chart, because I haven't got many Forex pairs on here, I don't think. Oh, I've got CAD Yen. So just put the same template on we've been looking at all day, which is the. Where are we? Where's it gone? It's not that one. That's what I can see. So CAD Yen on an end of day basis remains in a downtrend, Sabusi, and don't fight the trend, as I always say. So 108, 109 from October, and in fact 110 we went to in September and October. We couldn't get that high as we started to move down in November. Our November high was 108 or just under 109. And then it's been short ever since, hasn't it? So this pair remains short on an end of day basis. That big sell-off it had there on the 10th of November, and it remains short. So we've got that's gone short from whatever that triggered. There's lots of short positions still open on that 105.78. And it remains short. We trade at 100. So the big fat round number of 100.00 has been tested today and broken. No wonder you're attracting, and that will, probably have triggered and attracted a lot of interest. The fact it's got to the big psychological 100.00 Zabusi. But that remains short. That's its potential support level 100. The 1 hour, actually, so that's the daily. The 4 hour. Again, still remains short. Under its, it's been short since 23rd of November. The 4 hours that's been trending really nicely. 100 remains. In fact, let me just pull that down for the 4 hour. We reached 199. In fact, we've reached 99.75. I thought it's up there, 99.60. In fact, the hourly low was 99.44. So even under 99.50, which is quite an interesting movement down. So CAD remains short against the stronger Japanese yen. This week, this is the hourly time frame. We've topped through on Monday here around at 101.60. We couldn't get that high yesterday. Ran into it, bounced off it. Haven't got that high, so that high starting to get lower again. So the highs for the day are getting lower, and the lows are also getting lower. So our low yesterday was here. See what in fact the lows are getting higher. I haven't said that from Friday's non-farm payroll was my chart. So on the 1 hour time frame, that's looking not. No, it isn't. Yeah, that's broken under it at the moment, but that's just ahead of the numbers. So today our high is lower than yesterday's and Monday's at 192. And we're not as low as we were yesterday so far, which took us to 99.83. We're still over the psychological 100 level, but it's been tested. That would have been long this morning. Then it's closed out here. Then it's gone short there at 3 o'clock, and it's been down since then. So it's moving down again. I don't know what time frame you're looking at. Yes, doesn't matter. Right, okay. What time is it? It's what time do we start? past. Well, it's just over an hour, so we're okay yet. And there's more people coming in. Suleiman, nice. Thank you. Nice yourself, my friend. Martin, Kiwi CAD, big buy rally. Let's have a look, shall we? Let's have a look at the Kiwi file. We'll see. This we're going to get a less hawkish or more dovish Bank of Canada in a minute. Let's have a look. Kiwi, where's my Kiwis? Kiwi crosses. Kiwi CAD big. What did you say? Maltin. Sorry, I read that as Martin. Sorry, Maltin Lopez. Kiwi CAD. What's Kiwi CAD? It's this one here, isn't it? Let's have a look. Well, it certainly is a big buy rally, a huge rally. You're absolutely right. There we go. Massive rally here from the early October when we went to .7623, and it's just been long ever since. So, these are the sort of rallies that make trend following so powerful and also so scary, because you panic, you get out. Can you stay long in this position? Do you add to your position as it's going up? These are the classic trend following exercises that make it very difficult. So this end of day strategy, for instance, would have triggered, using these rules here, triggered. Again, here, this is the 18th of October. It doesn't look like anything's happening, does it, on the 18th of October here? Because we'd been down, we'd been down for August, we'd been down for September, we'd been all the way down to .7625 level, and we finally broke over the 20-day moving average for the first time here on the 18th of October. Back to test it for 4 or 5 days. In fact, we actually didn't close under it. We went under it. And then the big breakout was here on the 26th of October. And then it hasn't looked back since, has it? Just rally. And this is what I was talking about earlier about trend following and how moving averages need to be aligned. They're in order, and it's just been going up. Many would have added as it's broken out over key levels. There's the 80 level. Many traders would have added it's broken over there. It's then gone to 81, 82. There's 82 there. Huge rat. And there's no sign of this petering out. Is it overbought? Well, again, many would say it's overbought, but RSI says it's been overbought, i.e. it's been over the technical 70 level for RSI on the 14th classic 14 days count back. The RSI set at 14. Not 14 days, 14-day count back from the when's that? The 14th of November. So weeks away, but it was still going up. And interesting for me, just looking at the candles have got bolder, haven't they? As we've gone into the end of November, big one there, huge one there to start December. Another follow through here this week. On Friday. Consolidated Monday, and then on Tuesday, yesterday, we broke over 96 again, like we had on Friday. And then we've broken through that again today. We're over, we're not quite at 87, but 87's in charge. So that, as you say, Malpin, I don't know how long you've been on this one, but hopefully you've been on your surfboard, certainly surfing this from most of November and December, but lots and lots of pips on offer there, my friend. But yes, good call. And we'll see what the Bank of Canada make of this pair. So Canadian dollar here weakening against the Kiwi dollar. Nice long trend down here. Down here, wasn't it? Through August and the summer, bottoming at October. Now we've been long since the middle of October. And thank you very much. Lots and lots of pips on offer. Ombar asking about cable. Let me go back to my default cable. Again, another one that's had a good run against a weakening dollar recently. Anybody in the webinar still? Anybody wants to add anything? You're all very quiet over there. It's all our YouTube friends and our even on our CV site as well. What's it called? I forgot what that software's called. Escape, I think. Omar was asking about cable. So daily. Let's default the daily. Let's zoom up a bit. So again, it's bid, isn't it? We're up over there's a 20-day moving average, heading towards 120 is a big, huge psychological level for cable, my friends. 120. It's currently trading at 119.37, the 21 EMA. Big break of the 200-day moving average as we started December. It's cooled as it spiked to 123. So it's been a big old rally from that, spike down to 107 after the crazy disastrous because it cost the UK taxpayer $65 billion to £65 billion to fix right the Kwasi Kwarteng's disastrous budget. But cable's come back since then as dollars weakened, cable's improved, and it's over the psychological 120, which is a huge level for cable. And more importantly, or just as importantly, it's playing with its 200-day moving average here, which sits around 121.50. So it's broken that, and now it can't decide to break out this 150 pip range. Hope you can see that. So 123 is resistance on an end of day basis. 121 is where the 200-day moving average is, and that's support thus far. And the 20-day moving average sits under the key 120. So we've got some significant support levels for cable, and it remains relatively bid against the US dollar, but quite volatile. We zoom this. So the 4-hour, there's that rally to 123 into the end of November and beginning of December. Declined back under 122, back under 121.50, and ran in support at 121. So the 4-hour traders have support at 121. The 20-period moving average sits at 121.80, and resistance is 122. We're actually over 122 at the moment. So next upside target was that spike we had earlier this week to 122.60 to the upside, but a strong last candle has triggered long for 4-hour traders, and 1-hour traders, on the other hand, we've been short from Monday's high at 120 over 123. There's the 1-hour candle. We breached the 123 for a few hours on Monday, and then came down quite significantly under 122 into the 200-hour moving average yesterday and this morning. Couldn't go any lower, didn't want to go under 121, and then we triggered long this morning. Was that this morning? I don't know, was that this morning or this afternoon? In fact, it was at lunchtime. The 12 o'clock candle triggered long, retraced a wee bit, then another leg higher here at between 2 and 3. It's gone higher again between 3 and 4 and over 122. So the 1 hour's long. The 4-hour, what did we say with the 4? I've forgotten what I said now. The 4-hour big strong candle as well, that's triggered long. And the daily, if I zoom and go back, the daily is holding up as long as it can hold that 200-day moving average. Very significant. And the 120 level as well for cable. So that remains biased to the upside. Who's next? Direction on US oil. Well, it's been down all day. It's had a big shakeout, 2 or 3% wobble, more than a wobble. Significant decline. So Monday here, on the 5th, remember, it's the day the US, not the G7 and the EU. I'm going to say embargo. It's not embargo. It's a price cap for Russian seaborne oil came into force at only $60. We were up here at $83, and we crashed significantly Monday, Tuesday, Wednesday. We went down to 77.72 earlier today before we bounced. That was a new low for 2022, under $73 a barrel. That support was at 73.50 from the end of November, which we've come back through. It tried to go long on an intraday basis here, back to $75. 75 is a huge psychological numbers, but we've had a big old rally down, lots of money made on this downtrend, and that's cooled. As I say, 75. It's intraday. It's looking to try and go long. It needs to break $75. It's over its 20-hour moving average and ticking up. The 4-hour candles still remain short, and the daily candles, as I say, very much short from this rejection of 83 early in the week. So 3 big down days: Friday, Monday, Tuesday. Today has tested that 72 level and looking like a cool day, but pressure is still to the downside on US oil, Kozo, my friend. If you look at the day, this is an end of day basis. The 20-day moving average sits there at $80 a barrel. Obviously, could quite easily get back to that, but at the moment the trend remains to the downside, and it's been a good one to be short this week. US oil, because I don't know what time frame you're trading at, whether it's intraday or on an end of day basis, but it's gotten to move down. Kotso, I forgot how to trade with so many indicators. I don't know what you mean, my friend. Let's see Bitcoin. He says Bitcoin. So it doesn't matter, how many or how few indicators you've got. So whatever works for you. I mean, these charts have just sort of grown over the years, and there's indicators on here that are on there that don't necessarily use this particular setup. The key thing on this chart is the crossing moving averages, because it's a trend following setup. I could have other profiles that don't have anything on at all. I don't know. Let me show you an example. This one, Heikinashi candles. It's a different setup, and it's got no, it's got no candles on at all. It's just got the ATR. It's just different coloured candles. The rules on this one would be this one here, the 1 hour time frame Aussie would have gone long an hour or so ago on this big blue candle here, or the short would have been closed out here, and we'd gone long here using the ATR. But anyway, it's just about setup, my friend. The one I'm using today happens to be the default charts, which happens to be the three moving averages. Your question about Bitcoin, interestingly, today it's ran into its 200-hour moving average. So that's a key area. And as I posted on Facebook and Twitter earlier today, for 7 days now, we've been over the 200-hour moving average. So it's 1, 2, 3, 4, 5, 6, 7 days over it. We've been back to test it again. And it's held basically. So the 200-hour there at 16,765 is held, but intraday it's short. It's given up the 17,000 handle quite significantly early on today, and it's moved down into that 200 hours. That's held, but it doesn't look like it's wanting to bounce up at the moment. On a 4-hour basis, it remains quite weak, although it's starting to tick up here from the low we got to here at 15,400. So that again, purely technically on Bitcoin, regardless of obviously the sentiment, the news is very negative. As more negative stuff comes out from FTX all the time. Gossip yesterday that Crypto.com on the betting sites is the next one that's under pressure and next to go bust, but it doesn't help, does it? But anyway, it's sort of moved up from the lows. But it now, as it was stuck at 1650, it's now stuck around 17,000. So Bitcoin needs to break up and away from 17,000 if it's going to start to move up. We had a high this week, which took us to 17,385 on our platform here. So that's a new high. That's encouraging. In the last few days, that's been a new high, 17,385. We've got this support line here from the low, the height of 21st, middle, end of November, the FTX debacle. So, but a break away from 17,000 can't really be sustained at the moment. We've been down the last candles again today into 16,800, and that's held so far today. And on a daily basis, an intraday basis, on a 1 hour basis, get back over that daily line. The 200 hours held. So you'd want to see these need to cross to move back up, but 17,000 has proved a key resistance to the upside cut. So, my friend, Euro Oz asks Simon Peter. Euro Oz. Where's my Euro Oz gone? I thought I had it here. Euro Oz. I'm not sure. Got to my Euro crosses. Anybody over on the website? Malcolm's asked about the Euro. I'll come to the Euro. Nobody's actually asked about it. I'm surprised by that. I'll come to the Euro in a minute, Malcolm. Let me just do Euro Oz for Simon here. So Euro Oz, where's Euro Oz on here? I'm going I'm going screen blind. You know you do, staring at the same thing all the time. What's happening? Euro Oz daily. Oof, oof, oof. Bit messy. Big rally here. Except this is a daily. Let's zoom this up. I haven't looked at this for a while, have I? So 153.50. Big support here through November and as resistance in October. Interesting. Looks like that's breaking. That might be looking to break up though. Euro Oz through there. So 156.65. We're really where we were on Monday. Interestingly, so there's the channel we've had for quite a long time. So the longer the channel runs, the more significant it is when we break out of it. So here we've had October and November channel bound Euro Oz with 153.50 our floor and 156. 65 I want to think is really our top. So it's bouncing at the top of that. This, I mean, again, using the same strategy, it's not because it's going sideways, it's messing about a lot, isn't it? But the last trigger from a failed short position was a long position in the last couple of days here on the 2nd of November. 2nd of December, and a big follow through on the 3rd, the 4th, and here we are on the 7th, trying to break out. So, but we really need to break above here. There's 156.57, call it 156.60 for round numbers' sake. There, 156.60. Break of that. We've tried again today, so that's still bid to the upside. It's a really interesting one, that, Simon. But that channel has been running for a long time. It's a 2-month channel, so that is, I'm saying it's going to hold, but it's held for October, it held for November, so that's a big fat resistance. As far as the other moving averages are concerned, the blue line here is that's a trend line. I thought that was a moving average. Ever since another moving average, the simple moving average of 50, make it 50. Blue. Okay. So the 50s here below. So again, it's nicely aligned here. There's the 50, that blue line there. So yeah, but it's very much, it's been going for a while. So break we're at the top basically. So what will probably happen, intraday traders will be trying to short this as it's hit this top of the channel. If we look at the pin bars there we go. So it's broken up through it. So that's looking to go short here on the 1 hour time frame. But we've got the 50 hour still supported. So it's still bid. That's still bid all week. So 4 hour remains bid as well. That's the 220 period 4 hour moving averages there at 155.94 or 95. The 50 hours there at 155 itself. It's broken over this 56.60 top on an end of day basis. There's that channel there. So yeah, that's biased to the upside still. Siburi, my friend. So we did Bitcoin for you, didn't we? Somebody was asking about Euro Oz. So I've got it here. There we go. It's a white chart for a change. There we go. White background. This is on this particular chart. We got the Bollinger Bands. We have the ATR set at 14, the blue line here. We got the MACD standard, and we've got RSI at 7 here, not 14. So Euro, let's go to the daily time frame. It's a bit glary that for me on the white. I don't know if that's better for you guys or not, but for me that's a bit glary. That's probably why we've got the white black background. The euro remains a relatively well bid against the dollar. As you can see, we're in the upper half of the Bollinger Band. We're over parity since the middle or the early part of November, over 102, 103. And we even got over 105 recently, didn't we? 105's next big round number from 101, the parity level. So it remains bid. The 20 period moving average, which is represented by the midpoint of the Bollinger Band there, now sits at 103.80. It's still in that upper channel. It's sort of consolidating at the moment, waiting for obviously for next week. Be careful trading too close to these big central bank announcements. So it's, as you can see here on the MACD, it's sort of, the signal line's gone completely flat as we got to 105. Still biased to the upside. So, on an end of day basis, 103.80 is the big line in the sand. Bottom of the Bollinger Band now has come up to 1 101.96, so 102, so 103, 102. The Bollinger Bands are squeezing in, as you can see there. We've rolled over. The top is coming in, down. The bottom is coming up. So we may have a pinch and may expand either to the upside or to the downside. But at the moment, it's biased to the upside. We're in the upper half of the Bollinger Band on a daily basis. If we go to the weekly basis, just for I've done that on any of our charts, you can see we've been in a huge downtrend. Huge downtrend all year. This takes us back to the beginning of 2020 here when we were up at 123, and we've been down for 2021. We've been down for 2022. It's the weekly time frame. Remember, big breakout was this huge candle we had here towards the middle of November. Massive candle. Took us back over parity all the way to 103, and now we've been up since. And you see here on the weekly, that 105 is big fat resistance, but even the weekly candles turned around. So the drive lower under parity didn't hold for that long, but we're back up. So Euro 105 is resistance on the daily time frame. And we'll see what the central banks deliver next week. Who's more hawkish than who, and then whom, I should say. But yeah, there's a support 103.80. I'll say it again, and the bottom of the Bollinger Band 102 on an end of day basis for the euro. Anything less than that will remain relatively bullish as well. So the 4 hours petered out of steam at 105, and the 1 hour today. It's been chopping around, hasn't it? Very choppy. Nothing too exciting about there. There's that 105 level. We're back over in the last hour or so. Perked out of its... so there we got squeezed and then we went down. Squeezed and then we went up. So up over 105. 105 is a big support. And we've been as high as 105.50 today. Yesterday's high was only 105.30. But Monday's high, that tweezer top there earlier on, took us to 105.94. So that's the next level to the upside, 105.94. That tweezer top, and it came down quite nicely, didn't it? Nicely. Nice move there. Tested the outer Bollinger Band, through the middle Bollinger Band, down at the bottom bar. Didn't go up. Under, up, and then down. And now we've finally broke today and moved out and up. For Euro on the 1 hour time frame, Malcolm, I don't know what time frame present. Will I be marked present, says Tatana. Of course you'll be marked present, my friend. But if there's your time frames, the 1 hour, 4 hour, and a daily, Malcolm, you can see there's big move up today. 4 hour bit flat, daily still relatively well bid. Where did I get to? I'm starting to run out of steam now. Anel is asking, can you analyze the US 30? Of course I can. Stocks have been down quite aggressively. Down Monday, down Tuesday, and down. Markets opened half an hour ago, and I think they're down. Currently, are we up? I can't see on my Bloomberg screen over there. Let's go back to the black, if you don't mind. It's hurting my eyes, that, to be honest. Where do we get to? Anil. Where are we? Anil. Gotzo was obsessed with Bitcoin. He's asked about 3-4 times. We did Bitcoin for you, my friend. Yes. So Anil is asking about the US 30. So the USA 30 here. Again, I don't know what time frame you're trading it, Anil, but it's weak and it's getting weaker, isn't it? 33,500 is being tested at the moment. So that's moving down. It's short on the 4 hour, the daily, as I say, 1, 2, 3, 4 into its fifth day lower, having rallied significantly from these October lows down here under, intraday, we got under 29,000, didn't we? 28,050, and we've rallied positively, but it's closed under its 21 EMA yesterday. So that's certainly triggering short. That triggered. It's a weak close yesterday. Admittedly, it's the daily time frame, but it is under its 21 EMA. Follow the rules. So we've rejected 34,400. Basically, we couldn't break over that, and it's triggering short. It's still, still above its 200-day moving average, and it's still above its 50-day moving average, and that is relatively positive. Although they're out of alignment. Okay, so we've had the the 9 and the 5 roll it supporting up, but the 50 really needs to be above the 200. So it's looking like it's coming to breach that. But in immediate shakeout, it's gone under its 21 EMA. So it's still holding 33,000. Assuming this up, that the Dow still holding 33,000, 33,500, but that's support at 33,280 and then 32,90 under the key 33,000 level, and then this 200-hour and 50 moving averages are all starting to coincide around 32,200. So that's a big support. Currently, the 200 EMA sits at just above that at 32,400. And then the 50 is coming up to meet it at 32,002. So there's a big support zone there, but there's still a lot of fresh air to get down to there, isn't there? So even the S&P, the Dow is looking a bit weak as well, as it's closed under its 20-day moving average for the first time yesterday from this rally from October. So is it just a bit of a retrace, or is it a close below? When it closed below its 21, the rules are get out of the long here on the 5th. That triggered short there on the 6th, the close of the 6th. So, Anil, that's looking to roll over by looks of things. On a daily, I'm saying that's on an end of day basis, and it would have moved lower earlier on that big move up here on the 4 hour earlier there on the 2nd. Retraced high, couldn't break 34,400, and then it's gone short then, and then short there here. The 5th, the 4 o'clock candle on the 5th on Monday was the trigger because it closed below the lows of here. And then we breached here yesterday. We breached the low of this big up candle we'd had at the end of November. So that's gone low, consolidating unsurprisingly for a little while before, but it still remains trending lower there on the 4 hour time frame. And the 1 hour time frame, yes, looping, as you can see, looping lower all week. So that looks short. Jeremy's asking about cable. We just did cable a minute ago, but I'm happy to have a look at it again. So cable remains bid on the daily, big support at the 200-day moving average, just above 121. Zoom that up so you can see that. There's the 200-hour there, and the big psychological 121 is holding thus far. And even more key level is the 120 level down here, and the 20-day is coming up to that 120 level. So that remains bid to the upside. The 4 hour also holding its bid, but couldn't hold 123. So that's triggered long in the last candle, and the 1 hour time frame also triggered long earlier today, and it's still moving up or back over 122. 122.60 and then 123 to the upside on the 1 hour time frame. Jeremy, my friend, is that the same Jeremy? Yeah, Jeremy Cooney. Yeah, okay. Why withdrawal pending fast, bro? I don't know, my friend. Contact the support guys. It should be with you as quickly as possible. I don't know what your withdrawal method is. Obviously, banks can take a while. Credit cards can take a while. I don't know how you're doing it. No, we're not a scam, my friend. Zabi, is HMF broker a scam? We certainly aren't, mate. I'm real. We're all real. There's hundreds of people work here. I don't know why. I don't know what the issues of your withdrawal. I mean, email me, my friend. Webinars@hfm.com. I'll certainly investigate it for you. But you certainly everybody gets their withdrawals, my friend. There's no question about that. Simon Peter, HMO, there we go. Simon's asking. Euro Aussie's asking, and he's also answering your question, ZB, my friend. HMF are real brokers. Thank you, my friend. And give it time. I don't know. Sorry to be a bit flippant about that, ZB. Depending on the method that you've withdrawn, the credit cards can take a while. Obviously, bank transfers can take a while sometimes. There are instant, obviously, ways of getting your money back, but certainly, you honour all your withdrawals. There's no question about that, my friend. We wouldn't have been in business for 12 years if that wasn't the case. So there we go. ZB, did we look at Euro Oz? I thought we had. We looked at Euro Oz, haven't we, my friend? Simon Peter, I should say. Let me know if you want to have a look at it again. But I think we looked at Euro Oz for you a minute ago, didn't we? Klein's asking about the NASDAQ. Again, all the US markets are down. The USA 100. This is the daily here, the USA 100. Klein. climb up 420. And again, just like the other stock markets we've looked at, big up days in November, and we've shaken out quite significantly for December. So big up day here on the last trading day of November, that huge 4% rise. It's taken a few days, but we've wiped it all out, haven't we? 1, 2, 3, 4, fifth consecutive day lower. Obviously, that might be just a buying frenzy, and then we've shaken out. Can we hold? So we're under 11,500 on the USA, the Nasdaq. We're currently trading at 11,500, that key level. So again, another one that triggered short yesterday on this crossing moving average strategy. But you can see it's really crunched, isn't it? It's consolidating really around the 11,500 level. So that's key. Technically, the 50-hour moving average sits at 11,471. RSI is at 47, starting to drift lower on this particular chart I've got here. That stochastic looks a bit messy, but also relatively negative on an end-of-day basis. Climb up, I don't know what time frame you're trading at, but the daily is certainly into it. So say it's 1, 2, 3, 4, fifth day lower. Therefore, 4-hour will be short. There's that big rally at the end of November. Triggered short, and we've gone long here, retraced, and then it's been short under its 50 period moving average on the 4-hour, and well under its 20 period moving average. The 21 EMA for 4-hour traders sits at 11,700, and it's ran right into the more important 200 period moving average in the last today, basically tested as low down here, new lows. For a while, wasn't it? Earlier today, 11,400 was also tested. There's 11,400 there tested. We bounced off that. So this 200 period needs to hold for 4-hour traders, and the 1-hour traders. There's that 11,400 level being tested earlier. That remains short from a long time ago, doesn't it? So short, really, it's been that from that big sell there, retrace, but we're still. And then short again here through the 200-hour moving average yesterday. Gave way late yesterday, the 200-hour on the moving average here with this big down candle. More retrace, but again, still the 20 hours held as well. So that remains trending lower. And we've got a negative cross, the 50-hour moving average crossing from above to below the 200-hour moving average. That's not a great sign. And all nicely aligned, 200-hour, 50-hour, 21-hour, 9 hours, 5 hours. So that's continuing to move down. Yeah, good comment, Andrea. I agree. Good job, and good night, my friend. Yes, good night. If you're in Asia, it's obviously getting quite late. Petrocelli says, great. That's okay. That's good. Assad saying $1 yen sell or buy. Well, where are we? Have I missed the? What's the Canadian Bank of Canada done? Is it already out? It must be out. Is it out now? Is it? I can't lost. Yes, it was now, wasn't it? So, let's have a quick check. I would guess they've. Let's just update this. This is an internet connection, so no, I don't want that one. Don't want that. What happened there? Where's my candles gone? I don't want that. I don't want that. Where's mine? Too much going on here. That's what's the problem is. This workstation can't hold. So let's have a look what the calendar says. What did the Bank of Canada say? So I would guess they've gone with as expected. Thursday today. So Bank of Canada, yes, as expected, 50 basis point hike. I can't see any news. Let me see with regard to the comments, but certainly that would see what they've got to say. This Forex Live is quite a good site. Those of you who don't use it, interest rate statement for the meeting. There we go. This is quite a good site. Greg. Not a great deal of distance. Inflation around the world remains high and broadly based. Although it is proving more resilient than expected at the time of the October monetary policy in the United States, the economy is weakening, but consumption continues to be solid and the labour market remains overheated. The gradual easing of global supplies bottlenecks continues, although further progress could be distributed by geopolitical events. I'd read that as relatively dovish, actually, to be honest. And my initial reading of it, GDP growth in the third quarter is stronger than expected. Yeah, so inflation has declined. Yeah, lots of changes, actually. That's a much shorter statement. That's what this is showing you here. Much shorter statement. So see what how the CAD's done in relation to that. That came out 10 minutes ago. The Bank of Canada raising interest rates as expected by 0.5%, 50 basis points to 4.25%. It's high for a long time. Where are we? What are we looking at? We're still looking at pound yen. Sorry, dollar yen. That's the Nasdaq sort of weakening on the day. Yen has come back against the dollar. Dollar went to 137.70 earlier today. We're back to 136.50. Next support is 136. So that's triggered short here on that 1 hour time frame earlier today. Sad. In fact, it triggered at 4 o'clock. It went short with a big down candle. Been a previous big down candle rejecting that big resistance at 137.70. So many might have got in on the previous hour, but that's moving short. 136.50 needs to hold. If that doesn't hold, there's fresh air taking us down to 136 on that chart. Assad, my friend. Expound. That's a great word. On dollar CAD coming news. There you go, Coz. I know you must have put that in earlier. The news is been out. Let's go back to dollar CAD because that's the currency of the moment. And there's that short we were talking about earlier as we came on. They went short there, and it's continued to unwind. So that's CAD positive. So my reading of that, my quick online reading is, in fact, it's CAD negative. So this big rally up we've had for dollar CAD has cooled as we got to 137. The trigger earlier has followed through, but 136 is now the support. So 137, big 100 pip range has held from the break of yesterday, but we went through it quite quickly. We can go back through it just as quickly. So the CAD continues to improve. So is CAD positive? It's hawkish rather than being deemed as hawkish rather than the initial term. I thought that was relative dovish, but yes, some significant support levels here. So lots of fresh air taking this back potentially to 135, where the 200-hour support is for dollar CAD. Curzon, but again, the rules are, that cleared that long from Monday's closed out, triggered short there at 4 o'clock. But would you have taken that trade an hour ahead of what the Bank of Canada have got to say? But more hawkishness from, as far as the market's concerned, from the Bank of Canada. On an end of day basis, obviously, that's still relatively well bid. We can't make a decision on today. And we've got the Bank of Fed coming next Wednesday as well. So that remains bid as long as it's holding 136. And as far as end of day trades are concerned, as long as it's holding 135. So still, lots and lots of pips before that starts to turn lower for dollar CAD. So it's still remaining a dollar bid pair. Although today, it's coming back down with the CAD on bid. The weakness in the oil market obviously isn't helping the Canadian dollar Curzon. Pound CAD, that's what we just talked about, my friend. It's rolled over intraday. Let's just do this a bit more slowly. So it's rolled over intraday. Next support is 136, and then the 200-hour moving average at 135. So lots of pips away. That's 120 pips away down there in the 1 hour time frame. The 4-hour trader remains long, so long as 136 holds. It would need to break this 135.70, and then 135 is the 200 period moving average for 4-hour traders. And I say the daily remains bid, and 135 being the support level on an end of day basis. So you take your choice, you take your time frame choice, but obviously the shorter time frames would have been more rolling over. Karam, thank you, my friends. I appreciate that. I haven't paid you for saying that. Blank, Ola, Stuart, thank you, Ola. I get it. That's no money's changed hands for those comments. My it was called as a scam, but I can understand if you haven't got your money back, it's all online. You've got to be careful who you deal with. Pound yen, asks Millington. Pound yen has been sort of sideways here on an end of day basis. It can't break 168, as we said earlier, and it's got a support of 165. So there's a 300 pip range. The pound yen is bouncing around in for November and so far December. 4 hour time frame rallied up to this 168, 67.40 so far in December. 167.40. There's that 168 level on the higher time frames, and there's 165.50. 4 hour traders have support at 166.40 and resistance at 167.40. It's still biased to the upside because that 20 period is holding, but it's flattened out. So it's flattened out. It's not, so it's that range bound setup. Although we're way above this 164 low from earlier in December, so it's still relatively big. The 1 hour time frame running into that 167.40 today and yesterday. Rallied up Monday, Tuesday, cooled a bit. Rallied today and cooling a bit now, but doesn't really want to move lower, does it? So 166.75 needs to break before we get lower. As it's 5:15. My wife will be away. Let me just let Mrs. Cowell. I'm actually on the. No, I actually didn't know I was going to be doing a live webinar. Hang on. Let me just Mrs. Cowell know. So, guys, I'm going to have to go in about 10-15 minutes. Hope you don't mind. Because I haven't got a car to get home. So I'm sure you appreciate. I've been here over an hour anyway. Right, let's just run through some more comments. So there's pound yen. Saeed's asking which moving average are we using? Saeed, these on this particular chart here, this setup that we've been using today, the magenta line is the 21 exponential moving average. The yellow one is the 9 period moving average, and the blue one is the 5 period moving average. So the lower the number, the closer the moving average is to the actual price action chart. Okay, so that's my long term one, that's my medium term one, and that's my short term one. So the 5, the 9, the 21. Combination of moving averages. There's no magic to it. Lots of people use them. 5, 13, 21. I've seen 5, 3, and 21. 5, 3, and 13. There's lots of combinations. It's all about trends with moving averages. So here we've had this nice long trend. And then when they're flat, there's no direction. So you want the moving averages to be in alignment, which means in order, and you want them with a bit of an angle on them. Okay, so when it gets messy like it does here, it's very difficult to use them, and it can be very, very choppy. So you've gone all the way up to come all the way down here. So that's Saeed. This again, time frames. It doesn't matter. The setup is the same. This happens to be the 1 hour time frame. Dre, we talked about CAD. As I say, it's improving. The impression from the market's reaction is the Bank of Canada perhaps been more hawkish than expected, but we'd rallied quite significantly as the oil prices collapsed as well. Remember, there's other things in play here, this pair, but technically it went short here a couple of hours ago, and it remained short with 136 as support to the downside today. Good afternoon, Jenny. I am new here. Jenny, welcome. Hope you're staying safe. Anything you want to talk about? Anything you want to have a look at? From Facebook, Ali's asking, why is the dollar plunging now? Do you mean now, this exact minute, or now in the last few days? We got a big. We're coming to the year end. There's only 3 weeks left of the year. There's a couple of weeks to Christmas. We've got the biggest announcements that affect currencies are the central banks, and they've all got something to say this month. We just had the announcement from the Bank of Canada. We had the RBA, the Central Bank of Australia. But the biggest of them all, the big daddy of central banks, the Fed, have their meeting next week, the 13th and the 14th. So next Wednesday, a week today, 9 o'clock server time. There'll be their announcement. The market is expecting a cooling of these massive hikes, these 75 basis points we've had over the last 4 meetings, 50 basis points, as inflation appears to be topping out. But the US economy still looks quite robust. The jobs market on Friday, the beat expectations, came in at 263,000 new jobs. The market was only expecting 200,000 new jobs. So, excuse me. See where that goes. So markets tend to get ahead of themselves. If you're saying, why is the dollar plunging now? I don't know. Is it plunging now? Now euro's gone up. Certainly the dollar's taking a bit of a hit. There's not a lot of data other than the Bank of Canada. Japanese yen has come back in the last hour from a rejection of 137.70, so it's down. Markets do what they do. And if you're trading intraday, obviously you expect news to move it. But technically, you follow your rules of your technical chart. Cisco, hola, my friend. Hola to you as well. Good evening. Keep it simple. It looks very complicated. What looks very complicated, Malik? Yeah, it's whatever works for you, Malik, my friend. Absolutely keep it simple. I'm a big fan of keeping it simple. Kadir, hello. Michael, sir, I can see support on pound at 122.28 zone. Do you think it will sell from there? Says Michael. Cable. I think Andrea's off for the day. Goodbye. Everybody say bye-bye to Andrea. Good night, Andrea. I'll be going in a minute as well, guys. I got around here for a while. 122.28, 122.28, 122. I've got 122.60. Again, it depends on your time frame. Malik. Zoom that in. For me, as I said earlier, cable remains relatively well bid. This is the 20-day moving average, which sits at 119.63 at the moment, below the key psychological 120. So this almighty mess that Kwasi Kwarteng made of his short-term budget, markets didn't like it. It's cost the UK £65 billion to fix. The dollar cable went all the way to 103. It's recovered very, very significantly during, certainly recovered in October, recovered very significantly in November, and it's now back over its 200-day moving average. So 121, let me zoom that in. 121.50 is big support zone. It's been back to test that. So your idea at 122.28, if we go back to, say, the 1 hour time frame. So 122, your area here, 122.28. Let's put that in for you. 122.28 is, where are you? That's just below 130, isn't it? 122. You must be talking about today, mustn't you? Yeah. So it's sort of bounced off that, but here on a 1 hour time frame, it remains sort of bids to the upside. So it's still moving up. Some people have obviously plus the selling here. On the lower time frames, presumably people have got in sells. That's the 30-minute time frame, 5-minute time frame. 122.28. That's 124, 122.28. Actually, let's try and put that where you wanted it. 122. It's a bit higher than that. There we are. That's what the customer ordered. There we are. 122.28. Here on the 5-minute time frame, hasn't got to it yet. 15-minute. Yeah, it's so. But again, even on this short-term 5-minute, it's been long, short. Now it's consolidating here over 120. It doesn't know what to do now, really. So maybe you might be right, Michael, to be honest. The news is out on CAD. What should we expect in CAD? Well, it's gone. The news has moved the dollar CAD to the downside, but it had already triggered before the news came out. So this might be a false move, or this might have been a false move as we've moved up. But there's been lots of pips on order. So if you've been following the rules, you'd have gone short there and got stopped out for a flat. You would have gone long, just using this setup here. Very simple setup. You'd have been long here on Monday, all of Tuesday, and you'd have got out actually as it's tricked. So you'd have gone long, closed the long there, and then gone short here at 4 o'clock on this particular one. So you've been long from here all the way up, and then short. But again, just using the moving average crossing. But there we go. Yeah, Martin was asking about gold. Gold's had a funny year. So why is gold having slow reaction? Is it because of the Fed? Excuse me. Gold has had a funny old year, but it's here today. It's gone long here on the 1 hour time frame. It's long here on the 4 hour time frame as well today. But on the daily time frame, it remains relatively well bid, but it's capped at 1800. So gold needs to break and hold over 1800. It couldn't do it after 3-day rally, strong 3-day rally. It came back and tested, but it's still relatively well bid. The 20-day moving average sits there at 1750. 1760 is the 200-day moving average, and we're above that. And current support this week is the 1770 level. So it's really relatively well bid to the upside, gold. William says he's interested. Mark says, hello. Kiwi, do you talk to one another? I think you are talking to one another. Jungo's asking about the yen, dollar yen has come down here. As we said, 37.70 has been resistance today. Triggered short here at 3 o'clock, and it's going short. The daily time frame also remains short under its 20-day moving average, and it's trending down. We went all the way to 150. We had the intervention from the Bank of Japan, big move down here in the middle of beginning of November. Now we've looped down. We went to 134 earlier this week. It's still relatively strong historically, all the way up here at 135, 137. But again, on an intraday basis, the last big candle, well, two big down hourly candles haven't rejected 137.70. Haven't tried to test it for 5 or 6 hours today. 1, 2, 3, 4, 5, 6, 7, 8 hours. Big down candle, then triggered short. Certainly, you might have gone under there, depending on how you're trading it. But 136 is the next support for dollar yen. Andrew saying, dear sir, can you please contact your client support on live chat, email, phone, so that we can assist? Thank you. Andrew must have put that in. Somebody put that in. So, yeah, if you're not getting your... this was ZB, it's not got his withdrawal. There we go. Certainly to withdrawal. Hi, sir, says Jenny Lynn. Right, I'm going to wrap this up, guys, because it's 5:30 here. I've been here for an hour and a bit. I think, what time do we start? I can't remember what time we start. 2 hours, in fact, haven't it? It's been 2 hours. What am I talking about? You mad fool. Right, I do need to go. So thank you for your time, everybody. Let me just leave you with my thoughts. It's obviously Christmas is coming. Where's my slides gone? Why isn't the webinar showing up? Oh, it didn't show forthcoming webinars. Oh, never mind. Let me just, some of my favorite trading books, guys. Anything by Jack Schwager, the Market Wizards books. Mark Douglas. This business is, as I say all the time, is a mindset business. Alexander Elder and Van Tharp, two great teachers and traders, and teachers of traders as well. But my three favorite trading books of all time. Treat yourself at Christmas. I know it's times are hard, but certainly of the three books, I'll get them all if you can. But certainly, Trading in the Zone. In fact, I've got it here. So my latest copy, I keep giving them away to friends and family and traders, but my son got me this recently. My latest copy of Trading in the Zone. It really is a mindset business, trading, and I can't recommend it highly enough. Very, very simple. So do enjoy. Take care, everyone, and we'll see you all again soon. If you're brand new to trading as well, I'll leave you with this note, or Forex trading in particular. One of the best books I read in a long, long time, I haven't read anything better since, is Forex for Beginners by Anna Cooling. It explains things really, really nicely in my terms. She's a big volumist trader as well. Volume Price Analysis is probably her most famous book. She runs her own website with her husband, annacooling.com. Sell you all sorts of software and books and courses and all the rest of it. But thoroughly nice lady as well, top of it all. And full-time trader, futures, forex, and what have you, trade. So thank you, everybody. Any emails? Email me, ZB, if you don't get any joy from the support guys. Webinars@hfm.com. Follow me on Facebook. Follow me on Twitter. We're here to help everyone. So thank you. Take care and stay safe, everyone. I'm just going to close the webinar. All of you in the webinar, thank you for your time. Thank you for staying here. There's a question here I've just missed actually from Malcolm. Do you take profits beforehand or let the trailing stop loss? Well, if you're trailing stop loss up, you just let the stop loss take you out. If we were long here, just trail the stop loss up and then it takes you out. Here it's gone short. So initially, I don't know if I'm assuming you're still here, Malcolm. So here, for instance, if the rules, so that would be in the short entry. The stop loss at the moment would be up at this 137. So it's a huge distance, isn't it? That's the problem with trading moving averages. The stop loss, that's the distance. That's a huge distance. So you'd want it to move all the way down here. So, be careful. But that's the rules. Here it's worked out really nicely. We've moved down there. So, yeah, that stop loss, do what stop loss does. So thank you, everybody. I'm going to end the webinar. So take care, everyone. All the best. We'll see you again tomorrow. And end the webinar for everybody. Yes, I'll get rid of that. And everybody on YouTube and Facebook, I'm also going to end that as well. So take care, everyone. Stay safe. How can I get a copy of the book? Says Bert. The copy of the book. I don't know where you are in the world, Bert, but any good trading bookshop, Amazon.com. What's the other one? The book depository. I don't know if they'll deliver to where you are, but certainly it's only available in hardback. It's about $30, but it's this actually is a second-hand one. A very good copy of a second-hand one. I think my son got me, but. Best of luck. You can find it as a download on a PDF. The only thing about the PDFs is some of the when you download them from the internet, they some of the text is missing and stuff. But if you're serious about trading, $30, it's an investment in yourself, investment in your education. So anyway, take care, everyone. Stay safe, and may the pips be with you. All the very best, everybody. So take care, and we'll see you all again next week. Do the same thing again. All the best. All the best.